You are listening to ChartingWealth.com for Tuesday, the 15th of November, 2016. Market is up again. That is the overall market. When we break things down a little bit further, we'll see that the NASDAQ was actually down for the day. But let's talk about the total market first, as we always do. Two-day chart actually crossed over back on the 10th. We have the two-day candle, the most recent one, actually completed at the close of business on Monday the 14th. It was up. We have three up candles representing 6 days of up movement. We have a two-day trend line. Again, we have established strong movement on that two-day trend line. Please note, however, the weekly trend is still down. So all things being equal, the market tends to move in the direction of the largest chart, which is our weekly chart. Now, it is possible this two-day trend line will be strong enough that it will bend over the weekly, but right now we have a little bit of schizophrenia. So makes it more dangerous to trade an up trade when the overall market, the longest of our measurements, is actually going down. But you can still do it. It's just rife with some peril. Now let's look at the 4-hour chart. 4-hour chart is continuing to move up. It's actually been sliding sideways since the afternoon of the 10th, Thursday the 10th, but it has been meandering up. It's actually higher than it was, but it's mostly been sideways. Market up a little bit over the course of the past day, up in the morning and then down some in the afternoon. Really a lot of indecision at the end of the day with a spinning top, but the market was up 0.15%. We do see that we have a leveling off, it appears, getting closer and closer to a leveling off of the MACD, or now we refer to it as the price percent oscillator. It is the moving average convergence divergence indicator by another name. Why? Because the price percent is actually what's used instead of just dollar measurements, which makes it easier to compare to other things. Now, we see that the derivative oscillator is losing energy as we start to see the PPO flatten out. So we'll see if this pullback ends. Right now, there is no ability to jump into a trade. And with the schizophrenia going on between a falling weekly chart, a rising two-day chart, and the 4-day chart going in the same direction as the two-day chart, there's nothing for us to trade there until some things change on the total market. Now let's go to the S&P 500. It was up 0.06% for the day. 3 strong up candles, so strong up movement on the two-day chart. Still, we've got a down weekly chart, just like the total market. Derivative oscillator and the PPO are both moving up. If we look intraday on our 4-hour chart, what do we see? We see an even greater flattening of the movement. In fact, we have not seen the market rise above where it was in the afternoon on Thursday the 10th since that time. It's just been sliding sideways, and we can see that with the PPO. It's almost parallel. So maybe the short-term 4-hour chart's getting ready to cross over, going down. We shall see. Two-day chart still in an up move. The weekly chart down move. So it doesn't give us much in the way of trading. Now let's go to the Qs. We're going to look at that first on the two-day chart before we go to the 4-hour chart. The Qs is still down on the weekly and down on the two-day chart. Two-day chart crossed over, going down on the Qs way back on the 26th of August. And the weekly chart, and just to give you guys an example, when I said the market tends to move in the direction of the largest chart, all things being equal, we have seen the two-day chart going down since the 26th of August. However, it actually was moving up over that time period. Why? Because the weekly chart was tending to drive it up, even though we had some good falls in the market. But until the two-day chart the weekly chart switched over, going down, and then paralleled that movement on the two-day chart, that's really the only time we had safe down trades on the Qs. So please use that as a learning tool. So the Qs is down, two-day chart is down, weekly chart is down. We see derivative oscillator continuing to maintain down energy, and the PPO and the signal line are both headed down. If we go to the 4-hour chart, What do we see going on that? Well, the 4-hour chart, lots of strong down movement in the morning, followed by a down movement in the afternoon, and it crossed back over going down. Hopefully those of you who are interested in a Qs trade jumped in the morning, took advantage of that. That is actually going on. That is an actionable trade. We talked about that, about waiting and watching and seeing if that occurred, and it did occur. And hopefully those of you who were looking for that Qs trade jumped in and were able to jump on that action. Again, that is exactly what we look for. Again, to review, market was in a confirmed down move on both the weekly and the 2-day. We had until this morning the 4-hour in an opposite move. It was going up. Once it crossed over going down, that is indeed when you have the safest jumping in point. Now there was a huge amount of down movement. You could have jumped in as low as 114.03. You don't want to necessarily have to do that, but at times when you're trying to jump in and all you have is a 4-hour chart, people are always like, where is my jumping in point? Well, you can wait for that to close and for the next period to open, but again, sometime within that time frame. The minute that you do purchase into that trade, and again, this would be a QID because this is you would be looking for an inverse fund. You sure don't want to buy the Qs when it's going down, but QID, what is that? For those of you who haven't watched our video on inverse funds, how to make money when markets crash, you'll notice that the QID is the ProShares Ultra Short NASDAQ 100, and it was going up when the rest of the market was going down. It's an inverse fund. It moves in the opposite direction, meaning you can make money when the market goes down on the underlying equity. Here it is the QQQ, the NASDAQ 100. The QID goes up. That's where we are as far as the Qs goes and our 3 indexes. Now let's quickly look at gold before we run out of time. What's gold doing? Confirmed down move on the weekly and the 2-day chart. It just crossed over on going down on the 2-day chart. What is our 4-hour chart telling us? Because that is our prescient trading chart. Remember, it crossed over way back on the 7th. We had fair warnings to be careful staying in gold through the election. Gold took that bump up and then rolled right back over and started moving down. So gold in a confirmed down move at this point. We'll continue to watch gold's strong down moves. Let's just continue to watch. It's interesting. At the end of the day, gold did have a bit of up movement, so it paired some of those losses. Still down for the day, 0.83%. That's where we are when it comes to our stock chart reviews. For the end of the day on Monday the 14th as we go into Tuesday the 15th of November. We appreciate you being with us. You have questions, problems, concerns, let us hear from you. Go to our website, chartingwealth.com. Sign up for our daily market reviews. We will send you the videos every single day. If you want to help us out, you guys have made us as high as number 6 in the world for stock market podcasts. Help us out there at iTunes. Give us a 5-star rating, subscribe, say something nice about us. Also, you can go to our YouTube channel, which is where you can typically find some of the freshest information. We're one of the places we load things up first. Subscribe to that YouTube channel, and you will be in line to receive all of that information. Thank you so much for being with us. Let us hear from you. God bless from chartingwealth.com.